You see it opened up at 9:30, and it sold right off. It sold right off, really hard off all day until about 10:30, and then I don't know how good you can see this line here, but there's a line right here. This is a resistance line number 1, and quote tracker, Medvid quote tracker charts automatically calculate these and put these lines in for you, so you can actually see them before the stock approaches them. So I see it approaching down to support level number 1, and I'm like, all right, well, let's see how this market's going to react. So I actually timed this with some other, I'm looking at the overall markets. I trade in the ES and stuff, and I'm seeing some formation that I'm starting to like. And you just notice, well, just to give you an example, you notice the bounce that it has right here on Apple, has right on support level number 1. It's also lining up with a major number here, 160, which is a nice round number, which is also could be used as indicators for big stocks. It's actually like a mental, I call it like a crowd favorite indicator, a big number like that. 190, 180, 170 is usually a good point of support or resistance. So if you happen to see these two things line up, that just adds to the strength of this indicator. All right, so you notice this, how it bounced off of here right at 10:30. We ended up bouncing right off of that support line. And it was a beautiful trade. You could have got in there. I'm not saying get in and go all in. I'm saying take a small trade. See how the market reacts. Make sure the market's hitting some support levels. Also, if the market happens to be hitting some support levels at the same time or breaking out of a trend line, then you have yourself a great trade there. It's all about timing these indicators all together, using a bunch of indicators and trading them. All right, so you get the nice bounce off of Apple. All right, remember the pivot point is usually at the open. It's the major line where the stock usually would be trading at during the day. It's more of a neutral position. If the stock is trading under the pivot point, it's more of a bearish downtrend mark, and if it's trading above the pivot point, it's usually a bullish signal for that stock. So this one traded off and we came back, but lots of times the stocks usually trade back up to the pivot point. So you have a range here. So you buy it off the pivot point here. You see the bounce. What I usually like to do is just put it, when I start to see a downward trend, then I put a trend line in, and then I just continue it. I just follow it all the way up. I'm not concerned about what the market does, but I just follow. If there's two lows right here and here, I'll just follow it up. And I'll trade. And I believe I did. I think I pulled, did this trade on Friday. I got some Apple at the pivot point. I actually bought some Apple pre-market, taking a chance. And you know what happens when you take a chance? You get hurt. You get a pullback. But then again, I doubled down a little and I added to my my position there. So let's look at another example here. I'm actually going to go further on. You see we had a little pullback, and then we actually went right up to the pivot point, pushed through it, and then traded off of that and gyrated all around the pivot point. All right, here's another example right here. Google opened up at 9:30. Again, the market sold right off. Came right down to the pivot point. Actually traded under the pivot point, then right back up. But it was using, when I say pivot point, this is actually a resistance line 1, R1. I call them all parts of the pivot point because it's all based on the same calculations. So the resistance 1 line, we trade down to, we bounce back up to, we trade all around it. Again, you could notice the market, Google finding some support in this area, and then trading above it, pulled up and pulled back and found some good support here. And then once you see that bounce off of here, actually with a nice little bullish candle there, you could actually probably take a long position there, and then there you're off to the races, making some good money. All right, let's take a look at another stock, Microsoft. More of a bigger stock, not a very volatile stock, but just to give you an example, this one started trading above its pivot point. Actually, traded down to the pivot point because Microsoft was above its pivot point and traded down to it and tried to stay above it. It was more bullish for that day. So as long as it stays above that pivot point, we're usually pretty bullish on the indicators. And again, a stock will usually trade around its pivot point. That's where it wants to be. That's the main goal of that stock until it breaks out to a new level, and then it either wants to continue up to the next level or continue down to the next support level. So this one, as long as it was trading around the pivot point, as the market was selling off, I would consider this a very bullish sign and look to go long. Now you have here above the pivot point, you have resistance line 1. and resistance line 1 is showing you that's our first point of resistance. And again, that works the same way. Look for the stock to come up, test resistance, and pull back. So these are going to give you entry and exit position, entry and exit points to get out of your first trade of the day, and also give you an idea how the market's reacting. All right. Amgen trading back, gapping up on Friday, pulled right back a little under the pivot point, then traded back above it and stayed above it. Nice support there. It wasn't just using this as support because it was just 54.70. It was because it was the pivot point, and a lot of traders use this as a support and resistance. So there you go. A lot of people wonder, why does a stock bounce at a certain level? This is the reason. AKAM, a big trader I like to trade. Again, opened up at 9:30. Sold right off, but look at this. Came right down support line number 1. I mean, all these stocks just happen to be trading down to support line number 1 and bouncing off of it. It's just because these pivot points work, and it's a good entry. Like I said, I like to usually trade off the first support line. Pick a trade off. Don't go in deep. Just take a small position, see how it reacts. Then you can start adding to your position if the market starts to turn around, and you get yourself a nice trade. You could usually trade that right up to the pivot point. Well, actually, this one just stayed in this range throughout the day. I don't know if I have any more. No, that was about it for the trades right there. The examples, because again, I don't have much time to show you this stuff, but just wanted to show you how I usually trade these first stocks. Again, here's an example of E-Trade trading underneath its pivot resistance line, bouncing up against it, pulling back, bouncing up against it, pulling back until finally it breaks free of it. And once it breaks free of it, it uses it as support, and it can pull back on it. So these are very important tools to have. All right, I advise everyone to do their research on the pivot points. This is usually how I enter my first trade. I usually time this with my statistics on the ES-Z7 or the overall market. The pivot points also work on the overall market, but I find they work on stocks, the bigger trading stocks, because these are trading indicators, and a lot of big-time floor traders use these. So you see these work more effectively on the Googles, the Baidus, the Apples, the Garmins, the Rims. You name your stock, and it's probably working on it. So take a look at this tomorrow. I'll be trading them again. I'll try to, show you more trades using the pivot points. And I'll see you tomorrow at the market, 8 o'clock pre-market. Be there, be square. DayTraderRadio.com. You can listen live all day for the trade setups and everything. I'm DayTraderRockStar, and I hope you gained some knowledge from this video. If not, I hope you inspired you to do your own research and make some good money. And don't believe the hype. You don't have to buy anybody's system who says they know they have the Holy Grail. This is as close as you're going to get to the Holy Grail. Discipline, hard work, and using the right tools and profits. Taking your profits. You get a nice move. Don't be greedy. Get out of it, because this is going to happen every day. These moves are going to happen off of these points every day. So if you get into that habit of trading like this every day, that money will come to you every day, and your account will just build up. All right. I'll talk to you tomorrow. And also, I'll come with my watch list a little bit later tonight. So, bye.